Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so we're going to do a really quick market update for Las Vegas. It's a mid-month update. We just did one 2 weeks ago. Okay, and remember what we're looking at are small trends, little things we can pick out. Now, we do recognize that this is a special time of the year because we just had Thanksgiving and we're going to have Christmas. And so, Juana, before we jump into I have a bunch of slides with data. What are a couple factors this time of year, whether they're psychological or whatever, what's the trend in this market, other markets, what happens in, call it the holidays?
So people are very busy shopping, but not necessarily shopping for houses, right?
Yeah.
Everybody's out gathering all their goodies for the holidays, no matter what holiday you celebrate. And everybody's focused on gifts. They're focused on family. They're focused on food, maybe a little bit of traveling to go visit family, friends, or just enjoy yourself. And house shopping is not, generally speaking, a top priority for anybody. And on the selling end, sellers are, again, in the same boat. They're not particularly focused on getting their home sold unless there's something going on in their market that is incentivizing them to do so, or something going on in their lives that's incentivizing them to do so and giving them a sense of urgency. But otherwise, they're happy taking a couple weeks off and enjoying the holidays.
Okay. Perfect. Yeah, that's what happened. So what we're going to do, we'll start with the first slide, market action index. Now this is sort of it takes in all this data, and it spits out a number, and the number it spit out is 32. It's basically been 32 or 33 for 3 months. You can go back and look at the last videos we did. I think it was 34 in September, so September, October, November, and now it's December for 4 months. It's basically been sitting there, not declining, which is sort of a good thing. If you're a seller, it's not a great thing if you're a buyer, because you want prices to really tank pretty hard, right? If you're an investor.
Well, I kind of disagree with you.
Okay.
I like stability. I think everybody does. So the fact that the market's kind of not done anything for the last couple months,
Okay.
I think that's actually giving people some comfort, and it's giving them a baseline to move forward with whatever their plans are. So I think that the lack of movement in the market is a good thing.
Okay. All right. So the next thing we're going to jump to here, market action index. This is the 3-year version of it, and the line represents those numbers. If you go all the way to the left, that's the end of 2019, which was where 40 is sort of the number. If we're at 40 all the time, that number is like a normal market. Okay. 40 is like a normal market. It was 2018, 2019, it was 40. It just sat basically, sat at 40, kind of a normal market. Then it shot up, and you can see how it got 50s, 60s, 70s, and it was that's when people said it was crazy. And the reason why it did that is because inventory was very low, and there were a large number of sales. It was looking at list price increases. It was looking at very few, it looks at all the factors, right? So it's in a way, it's sort of like the overall, what's the market? It's like on a scale of 1 to 100.
Right. I think the driver in that was the overall, one of the strongest drivers in that was the low days on the market, which prompted buyers to panic and make offers all over the place. And that's kind of what fed into all that.
Yeah. Something that's interesting, if you look back in October, the 7-day average was 20. That was really bad. We thought maybe it would drip, it would punch down below 30, but you could see it got kind of volatile, and something happened in there in October, and I'm going to show you in the next chart what happened, because all of a sudden this thing settled out. But when it bounces around like that, that usually means it's getting ready to turn, because if you look back over the whole thing, every time it bounced around, it went from going up to down and down to up. So it's possible we're sort of at a bottom, but things are going to change in the spring, because what two things tend to happen in the spring?
Everybody thaws out, so the weather gets better and people come back out and shop. Sellers put their houses on the market. Buyers are looking to relocate in time for the new school year. And everybody in the real estate industry gets busy. Yeah,
and another reason that there's not a lot of movement this time of year, people always say, oh, it's the holidays. Well, that's literally not the reason. And this is why. The reason why there's not a lot of stuff going on is because people's lives tend to be built around the school year, because of how schools work, and how people don't want to move in the middle of the school year. So people are interested in selling their house, getting their houses sold in the spring. and moving in the spring, leases tend to all mostly come up in the spring. So if you're locked into a lease in December, you're not going to be out house shopping to buy a house. Most people want to time it. They want to, buy a house 10 days before their lease expires. They have time to move all their stuff over, right?
There is truth in that, yes.
So this buying season that happens in the spring is sort of, will definitely tell us where things are going. But this fall was very important. And with that, I'm going to show you the next slide.
Okay.
Next slide is a median list price. Now, as you can see, it rose. It hit a peak and started declining. And you can see that little dashed line was well below it. That's a 7-day average. That tends to be a leading indicator. But you can see what happened is all of a sudden down there, all the way on the right, the difference between the 7-day average and the 90-day average is starting to shrink quite a bit. So what could likely happen here is over the next month or two, maybe into February, that these flip and the 7-day average is higher. And then potentially home prices are going up. We don't know. But what's going to depend is how many houses hit the market versus how many people are buying the houses that hit, right? It's equilibrium.
Right.
Because right now we have a slight disequilibrium.
Yes. Yes, we do. So right now, if you're a buyer, you have more choices. You have more sellers that are willing to work with you as far as inspections, closing costs, and anything else that you might need. They're much more willing to work with you. That's not to say that they're going to give the house away. So please do not misunderstand. They're not going to give the house away, but they will be much more flexible than they have been over the last couple of years.
Anecdotally, what about the people who have their fund number to sell, but they don't have to sell? How's that influence the market? Because that's going to go into the next slide. After you talk about it, we'll put the next slide and then they'll be able to see it.
Right. So those people who have their fund number, as we like to call it, and if they get it, great. If they don't get it, that's fine. So those people are people that will come on the market. They'll hang out on the market for a while. And if they don't get their number, they'll take the house back off the market and either decide to keep it and wait until the market gets to a point that it catches up with whatever their fund number is, whether they're living in the house or it's an investment property. The thing to also keep in mind is there are people out there who are interested in doing 1031 exchanges. And these are really interesting people. They're kind of a different duck. These are investors. And they're not just doing 1031 exchanges on rental properties. They're also doing them with vacation homes. Okay. So something that we're also seeing is people who are maybe selling some investment property, and they are looking to purchase an investment home because maybe that investment home either was out of reach previously, or they're at their point in their lives when this vacation home that's the right time for them. So there are all kinds of different nuanced things happening in the market. So that's one of the interesting things that I look at and I find very challenging to kind of sort out as opposed to the rest of the market.
Yeah, it's like a sub-market.
It's
it's something underlying that's happening that's not strictly driven by Wall Street buying houses or by maybe a flipper or interest rates, because interest rates more affect one big segment of the market, which are people, W-2 earners who are trying to buy, right? Okay. The next slide, median days on the market. Now you can see it's rising. Now it looks scary, but if you go all the way to the left, you can see it's still less than it was in 2019. The trend, though, is that it's going to go higher. If you go back even further, you can see that this is basically going back to a normal number. We'll see when this starts to turn. If you look every year, it turned in basically January. If you go back to 2022, 2021, it started increasing, days on the market started decreasing.
So I want to address this days on the market.
Okay.
Because people are saying, well, the days on the market are increasing because of the interest rates and nobody can afford houses. Well, yes and no.
Okay.
And I want to say, well, here's the thing to keep in mind. We're still dealing with a lot of sellers who have not come to grips with what their property is worth today versus what it was worth some months ago.
Okay.
And this happens all the time. Remember, you have to come on the market with your property priced well. And the reason for that is because when you come on the market, you're the new shiny. So everybody who's looked at everybody else, they've already rejected everything else. So you've got this massive pool of buyers that are going to look at you the first few days your property's on the market. And if they don't come see your house, they're not interested and you've lost them.
Yeah.
So now the only people who will look at your house going forward are new buyers. So this whole huge pool of buyers that's been looking, you've lost them.
Yeah, and that's the biggest opportunity.
It is the biggest opportunity. And I can't stress that enough to sellers, that please come on the market with your property priced right. If it isn't priced right, make a rapid price adjustment. Do not be the person who then has to chase the market down. Because the longer your property is on the market, the more people will discount your property. So let's say that you had your property on the market for $500,000 and your property is really maybe only worth $475,000 and nobody's made an offer, or if they have made an offer, they made it at $475,000 and you said no thanks. So you go 30 days and now nobody's looking at your property, and maybe somebody makes an offer now for $440,000 and you're thinking, what? I could have sold it for $475,000, a month ago or 6 weeks ago, and I didn't, and now I'm looking at $440,000. Well, that's kind of what happens. Your property has now been on the market for a while. People who would have been happy to buy your property at $475,000, you have turned them away, and now you've got people who are lowballing you. So this is why it's so important that you come on the market priced right. If you come on the market with a dream price, fine, but make that price adjustment quickly. If you don't make that price adjustment quickly, you will suffer and you will get less for the property than you would have originally gotten for it in this particular market. Obviously, it doesn't apply to all markets, but in this particular market, this is what's going on.
All right, next slide, price per square foot. I've got a bonus slide about this in a couple slides from now. The interesting thing about this one is that the 7-day and 90-day average are really, really close. And you can see that because we've had such a strong run the last few years, that leading indicator, that dashed line, has been above. And now they're really close again. So you can see back in maybe June, it flipped where prices peaked and price per square foot peaked and started coming down. But now they're getting close again. So if that little dashed line shoots up, which it tends to do in February, which is 2 months, if it does that, then we potentially either have this thing level off, it goes up, we don't know. But it's just interesting to see this. What we do know is that we don't have the same phenomena we had before, where this number was declining and inventory was rising. Because inventory is not rising, it's flipped. If you were to take these charts and go back to 2000, if we were doing this video in December of 2006, 2005 even, going into 06, it would look pretty bad. Because 05 was hot until like May or June, and then like the brakes came on. And then it was like, what is going on? The inventories kept climbing through the end of 05 and all of 06. That's the opposite of what's happening here. Like it literally looks different. And it's closer than it was 2 weeks ago. That's sort of the granular thing. It's closer than it was 2 weeks ago. So it's a leading indicator, but remember, this is a volatile time because there's so few inventory and there's so few buyers. Right.
So because the inventory is so low, any movement in the market has an outsized impact.
And that's the reason home prices went up so much, because there was so little inventory. People were like, okay, I don't care if it's listed for $350, I'll just offer $375 because I need to get the house. This is the 10th one I've made an offer on, and I'm just tired. It's frustration.
It is.
Bidding, basically, for it. So, and we talked about this, how a lot of the price, people are saying, oh, prices are going down. The froth disappeared from the market. 95% of all people that bought a house more than a year ago, their house is probably still worth more. If they bought it 3 years ago, their house is probably still worth a ton more. That frothy number, just because somebody's paid $1 million for a house, you can't say my house is now worth $1 million. Your house was never worth $1 million. Just because some idiot paid $1 million doesn't mean your house is worth $1 million. And then if you sell your house for $800, it didn't drop 20%. That's a myth, right? Market value is market value. Okay, next slide. This is a really cool one. I circled all the important things that we're going to look at here. Inventory. On October 21st, there were 749 houses in Vegas proper. It's not the whole MLS. This is just the city of Las Vegas. There's only 4710. So this is, remember, we're analyzing the exact same piece of data every month.
So so to Todd's point, we're looking at a very particular geographic area so that we can see trends better and we can communicate that better.
Yeah, because if you take a bigger area, then the problem you have is it averages out more. And, if something happens in Boulder City, or because our MLS shows stuff outside Nevada and in Nye County and places like that, and then if they go out in Pahrump and somebody lists a bunch of small houses, it brings down the median and it's artificial because it's not here. It's something going on in Pahrump.
Right.
But here's the interesting thing: is over 1,000. It's like 20% less. We have 20% less inventory than we had, and that's kind of an interesting trend because it does turn this time of the year, but it's the same reason it turns is because the buyers start to show up before the sellers are ready, because you have to buy before most people are interested in buying before they're selling. That's kind of this unmatched thing. That's why we have more sales in the spring and less in the fall, because it's matching up buyers with sellers. I don't know if I explained that the right way, but all sellers are not buyers.
Right. So what you're saying is that buyers drive the market.
Yeah, buyers drive the market, and sellers tend to sell for extraneous reasons that are not specifically. I mean, we've run into a lot of people who are like, I need to sell. And they fill in the blank. They have a thing that's an external event that's making them sell. And then the buyers are like the time the market type people. I need to buy at a reasonable time. But the other problem with buyers timing the market is if you said, hey, the home prices are going to be 3% next year at this time, they would probably say, okay, that's fine because I'm not going to throw away a year's worth of rent and then wait. Right? Because there's a it's not like the stock market where you just you buy that stock right as it dips below 100 and then you buy a bunch of it and then you sit on it for 5 years as it just goes up. It doesn't work that way with real estate because you have opportunity cost of your money.
Right.
Okay. Now the next thing we're going to show you is pretty fun. This is price per square foot, but it's broken out by the homes. Okay. Now, the blue line on the top are the most expensive homes. And then the next three lines that are all really close together are the bottom 75% of the market. Okay. What's interesting is that you saw that there was a split all the way to the left between the bottom of the market and the top of the market, which is really artificial because a 4,000 square foot house that's $2 million is going to be probably on half an acre. It maybe has a view of the city. It has a massive pool, and it's super upgraded on the inside, which is different from a 4,000 square foot tract home in Spring Valley or even in Summerlin or places like that. So the what's interesting is you saw as the market sort of blew up, that top quarter segment went even higher. And what it does is it drags up. There's more transactions happening. They're happening for more money. So that median price is now, it's pulling the price up. So it's artificially making it look like home prices are going up more than they are. And then people tend to over offer on cheaper homes because this is like the rising tide. It's like a market effect. They see the things going up and it's very psychological, right? But if you noticed here, this is very interesting. It looks like the top quarter of homes just got like chopped off. The values got smacked out of them really hard. But what's interesting is you see it's basically, we're back to that same split, the top of the market to the rest of the market. So it looks like that it's sort of the decline is starting to run out of steam. Not saying it's not going to keep going down, but the trend of going down is less. So there's probably some paper out there that's going to make a headline that'll say, home prices were going down at X percent per year, and now they're only going down at this, so now they're going up, right? Because that's how they do it. Right.
Well, because headlines like that get eyeballs.
I know. Okay, we said in September we thought there would be deals for the next 4 months. You can go back and look at our video. I think we said it twice. There would be deals for 4 months. Still believe it. October, November, December, January. Anecdotally, we were playing around with the Altos information. We found a market where in the last 2 weeks, the market action index like went from like 38 to 42. This is a market where the homes started disappearing again. So we got some inventory, and then the home prices started disappearing. So it's interesting to see that, because we still have interest rates. The Fed raised rates half a percent today, which is less. I did have a lender tell me that there's still some high 5% rates out there for paper borrowers in different, depending on what they're buying.
Right. So remember, just because the interest rates are 6%, 6.5% for some people, they're not that for everybody. They are dependent on a lot of different factors. So if you're thinking of buying, or if you're in the market for that, you need to speak with a lender, because your interest rate is not necessarily what you see online. It's really important that you take a look at that, because it is very much dependent on you, and vice versa. I mean, if your credit or your debt to income ratio isn't so great, your interest rate could be considerably higher. So that's something to keep in mind.
And I'm going to point out one other thing about quote unquote buying at the bottom of the market. Every single person cannot buy at the exact, like if I were to tell you this market will bottom in June of 2024, like on February 3rd of 2024, that will be the absolute lowest median price, and then we'll start going up again. And you say, I'm going to nail it. So I'm going to do. I'm going to start looking at houses in January. I'm going to close on that date. The problem is, if everyone did that, then the 4,000 houses in the MLS would all, like, you have 10, 20,000 buyers trying to buy them all, right? It doesn't really work that way. And the other thing too is you have this other cost is, if home prices didn't increase, if they stayed the same for 5 years, you would have just paid rent instead of paying a mortgage, which it might be less. Over the last 2 weeks, rents did go up by a couple bucks. It's probably noise. There was a slight downward trend in rent, but remember, rent is really sticky, right, Juana? Rent is stickier than home prices.
Right. So let me explain a little bit about rent and why sometimes people get more than market value for their properties in rent.
Okay.
Because moving is expensive. It's expensive on a couple different levels. First of all, tenants have to go apply to rent a place. Each place that they're interested in applying charges an application fee, and that's real money. And so that's one expense. The other expense is the actual expense of moving. And then last, but probably one of the most important things, is that in order to move into the new place, you need to pay them your security deposit, first, last month's rent, and all this good money. So you can end up having to, shell out $6,000, $8,000, $10,000, $12,000 depending on what's going on, and that's a lot of money, as opposed to just staying where you are and just sucking up the extra $100 a month that you are now being charged in rent. So it's not as simple as saying, well, I would save $100 a month if I move. Well, you would, but what's the cost of moving, considering all this? And
the time. And you have to change everything now. You have to change your bills. You have to mail in a change of address to a bunch of places.
And some places charge for a change of address, like, for example, having to change your address with your driver's license. That costs money. Yep. So it is, there's a real economic cost, such as, the cost to move, right? The moving truck, the moving people, and all that. There's the minimal cost, like your driver's license and things like that, but it also takes time, right? Because you have to, change everything over. Maybe if you've got kids, maybe they have to go to a new school. That's a pain in the tush. And remember, your kids have to make new friends, and that's not helpful. Maybe it's not closer to your work. Maybe, so there are lots of variables in there, which is why people tend to stay in the place that they're renting beyond, if you will, their economic good, because of all these things.
Yeah. And a lot of times, this is where we see the tenant to homeowner. They just get tired of it, and they just, what their economic situation changes sometimes, who knows?
And Todd brought up that people tend to move in the spring. One of the reasons that people tend to move in the spring is because that's when tax refunds come. that forced savings that you've been doing all year by overpaying the government, you get that refund check back, and then people are able to use that money for that security deposit or for that down payment, closing costs, whatever that is. So they're able to move that way. So that's one of the other reasons why there's a lot more movement in the spring.
I'll say the last thing and then you can close it out.
Okay.
Okay. If you're not subscribed, please subscribe, and this is why. We're going to track this thing every 2 weeks. And then what we're looking for, the spring is going to be super telling. So last spring, we said the fall would be telling to see if inventory kept going up, and it didn't. Mm-hmm. And that's good. The Fed has been easing, but not as much as we thought they would because inflation is still high. So that's still happening. So that's going to still have a downward pressure on prices. But the weird thing is, even with that, inventory is dropping. And so this is sort of if interest rates are high, why is inventory dropping? The opposite should happen. There should be more people putting their house on the market than people interested in buying, and that's not happening. That's a really weird phenomenon that's going on right now. When we get into spring, this will be really important, that if inventory increases in the spring, when we have more people trying to sell than buy, then that could be a problem. But the bottom line is, if you're moving here, you have one of two choices. You either buy or rent. Mm-hmm. And if you're renting, then some of those people who are selling that don't have to sell may just turn their house back into a rental, because we've talked to people who have said, hey, I want to sell my house. And we're like, do you really want to sell it, or would you rather rent it? And then after having the conversation of what the house is worth, a lot of times they say, you know what, we'll just keep renting it. And we're like, that's fine. Then call us when you're ready to sell. Because that's what we do. We list a house. We're listing agents.
Right.
Yeah.
So two things. One, there are sellers out there going fishing. So they're putting their houses on the market and saying, hey, if I get my fund number, great. If I don't, I'm keeping the house. So, and that happens in every market, but I think there's more of that right now than there has been in some time. And then the second thing, sort of tangential to this, there's a school of thought, and let me know what you think, because this is really interesting to me. There's a school of thought that tries to predict the economy by looking at fashion. So let me know if you know anything about that. What I've read about it is that the longer women's dresses are, or skirts, the more pessimistic the view for the upcoming year as far as the economy is concerned. Now, I have seen that in the stores. So in the stores, I'm seeing, much longer dresses and skirts. But when I'm out and about, that's not what I'm seeing women wear. So I think that's really interesting. So is it that the fashion industry is more forward-looking, or is it that women are saying, I don't think so, I'm still pretty optimistic and I'm wearing something short? So I think that's an interesting phenomenon. So let me know in the comments what you think about that. And if you have any data on that, please let me know, because I've read some articles about it and I think it's kind of interesting.
I want the economy to be so hot that the 60s miniskirts come back and short shorts and go-go boots.
There you go.
That would be pretty cool. That's how hot the economy needs to get.
So leave us comments. We'd love to hear from you. Please be nice to each other in the comments. Subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.